Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to hopefully not lose all of our money on the internet capital markets. Loaded up for discussion today, we have Berachain jumping as high as $7 billion FTV before pulling back to 4 amongst quite a lot of FUD and criticism. We'll dive into that in a little bit today. We've also got the Trump team preparing to launch Bitcoin and ETF, Bitcoin Plus ETF, along with Made in America ETF and Energy Independence ETF. We'll get into that news as well. We've also got the latest on price action on crypto and NFTs, plus a general discussion today on what is going on in the market, where the liquidity is flowing. So stay tuned for that. Got Legendary in the co-host seat with me. We're ready to get into it. But just a reminder, friends, before we do that, nothing that we say here is financial advice. This market is very, very risky. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Friday. It is the 7th of February. How are you doing? How are you feeling today?
GM, I am in an excellent mood. Also very excited for the weekend. It's probably the first weekend in I don't know how much time where I have nothing really planned, no off-chain tasks, no on-chain tasks. So I'm curious to see what I'm going to do with myself.
Interesting you say that. It's interesting because now that, we do the media, we're scanning for news all the time. We're getting, we're on top of all the details all the time. What does it say, Legendary, if there's nothing to do? It's kind of like I just told you before the show. Of course, there's some like headline news and there's some other interesting conversations we're going to have today. It's not as busy as it was last week. What's your reflection here? Why are you free? Is it over?
It's not over. I'm sitting in stables. I finally bought a very nice hyperliquid dip, which we had today.
Oh,
Finally happy with myself. Yeah, I gave up to buy hyperliquid under 20 for the time being. So increased the JLP part, increased also the USDC vault in hyperliquid, and I'm watching the passive APY hitting the portfolio, kind of doing this transition from trying to grow the portfolio in a logarithmic way to just go with linear growth right now, and it's relaxing in a way. I'm happy.
What hyperliquid dip did you buy? Is it 24? You bought it at 23?
Yeah,
24?
I didn't get more, 23 point something.
It's not a huge dip, is it? But hyperliquid does, it's down 5% to be fair, which is a dip, but it's so damn strong compared to everything else. So fair enough. That is a reasonable dip on hyperliquid. What else? How else you're approaching things fairly calmly. Chilling in stables at the moment.
That is what's going on. I think you have a interesting discussion point planned for the day around the post by Miles Deutscher. Are you going to touch on the market a little bit? I have a couple more thoughts on that, especially as I also had that post in the morning. I was like kind of asking what is going on in the market. There were a couple very interesting responses to that. So I do think we can have a bit of a discussion around that as well.
Okay, yeah, I've got some additional thoughts there too. So let's just get into it, and we're going to get into that discussion as well as the main headlines in just a little bit, as usual. Starting with the price action, as always, with the majors, we have Bitcoin is just down 1%. It's at $97,900, down 6% on the week. ETH is at 2.7K, down 1%, down 17% on the week. XRP is at $2.40. It's pretty much flat, but it's down 20% on the week. And Sol is pretty much flat as well, down the same as ETH, more or less, in the week, down 17%. As Legendary mentioned, Hyperliquid's down 4.5% to 24, to the extent that we're elevating that now up into the major conversation. Getting into the meme coin side of things, absolutely no respite at the moment. No respite at all. Doge is down another 2% to 25 cents. Pepe is down another 4%. Trump is down another 4%. Bonk is down another percent. WIF is down another 5%. Pengu down another 5%. But this is across the board. SPX, Murad's coin, down another 7%. Fartcoin, if there's anything that's going to outperform, it's going to be Fartcoin, which has bounced 10%, although down 50% on the week. So there's really no respite here, guys. AI16Z is up 7%, but more or less, okay, it's just carnage across the board. And just for additional context, I think this is probably the more important data point. On the 7-day, Anime Coin down 40%, ARC down 40%, AIXVT down 45%, MOG 30%, AI16Z down 50%. So, if you had a significant meme coin, culture coin portfolio in the last 7 days, you've probably seen 40 to 50% wiped out. So we'll be diving into that in a little bit. Also comparing it to some VC coins, to be honest, I think that's an interesting conversation to have. Getting into the headlines themselves, just had two for us today because we'll be doing some more general conversation. Got Berachain coming out yesterday as high as 7 billion FDV before it pulled back to 4, where it is now. We had Trump announced, the Trump team, and that preparing to launch a Bitcoin Plus ETF, along with a Made in America ETF and an Energy Independence ETF. We'll dive into that article in a bit more detail to just understand what on earth those things mean, to the extent that that information is even available. So we'll share that in a little bit as well. NFTs, though, at least CryptoPunks are behaving pretty strongly in this market when everything else is tanking. The CryptoPunk hoodie sold for 206 ETH, showing it on the screen for the people who are watching in. And the Berachain NFTs, even just before the launch, were really ripping. So a Bond Bear NFT was sold for 140 ETH, and a Boo Bear Berachain NFT sold for 51 ETH. So pretty big stuff. And obviously we saw 6.9% of the airdrop allocation went to NFTs, which was a pretty sizable amount. So that kind of justified those very, very expensive prices, I think. That's that. Legendary, what's going on the NFT side, the rest of the NFT market?
Yeah, absolutely. Let's take a look at that. Bored Apes basically pretty flat, sitting at a 12.95 ETH floor, just down 0.4%. Pudgy Penguins, however, are down 6% over the last 24 hours at a 10.05 ETH floor. Very similar picture for Miletus as well, down 10%, 4.08. 9 ETH floor for them, which puts them at a drawdown of 16% over the last week. Doodles share a very, very similar price performance right now, down 8%, 3.83 ETH floor, down 15% over the last week. Azuki's are down 2% over the last 24 hours, 3.18 ETH floor, and down 6% over the last 7 days. So a rather red day across the board to NFTs as well.
Yeah, okay, very much so. That is not so great, but let's get into the Web3 Roundup to get up to with everything else that's happened in the space in the last 24 hours. Solana stablecoin market hits an new all-time high, surpassing $12 billion. That was reported by Cointelegraph. Very interesting data point, right? When people think stuff is all over, typically, or at least in the last cycle, a lot of those stablecoins left the blockchains, whereas now seems to be still attracting more capital. 32 CryptoPunks were liquidated last night for around $4 million. This was on MetaStreet, that NFT lending platform. So that was interesting to see. I think they were all bought by, I'm not sure if it was just one person, but very bought happily. That's what I'm saying. And I don't think there's been any effect on the floor price, really. Solana Skyline announced to provide New York builders an area to co-work with co-working opportunities, regular events, networking, and educational workshops. We keep saying over time, that is one thing Solana is clearly doing much better than other blockchains, including ETH, providing builders in different geographical locations, hubs for them to get together and build together and co-work and kind of mix around. Accelerate DAO announces partnership with Virtuals to help source, incubate, and build with teams that can help push the Virtuals ecosystem forward. Remember, Accelerate DAO was the one that launched quite recently with to a lot of FUD, to be honest. It completely ripped out of the gate. They did a very, very small pre-sale. People were up millions of dollars very, very quickly. I think is retraced very aggressively after that. But it looks like they are continuing to build. And I think officially this counts as a venture partner to Virtual. So they're going to be helping to incubate some teams, maybe almost like quality control. I think that Virtual's having had a lot of agents put out. Maybe not all of them was the highest quality. I suspect this is going to be like, look, we're going to work with teams to produce, to ensure some quality for some of these agents coming through. And then finally, also on the AI side, Story Protocol announces Cerebro as a first AI validator of Story Protocol, which is interesting. That is the Web3 Roundup. Before we get into the main headlines, legendary, and we have a general discussion on the market, which I think will be quite fun today, to get our general reflections. What is catching your attention from the rest of the Roundup?
Absolutely, the AI Accelerate Virtuals partnership. And also on the note of Virtuals, I don't know if you've seen this, sharing my screen right now. The Virtuals team is supposed joined us at the X headquarters to envision an agentic future. Together, we'll build a world where AI agents and humans benefit from each other. Exciting times ahead. Also tagged Ethermage, the founder of Virtuals, whom we had on the show for an interview in November, October, like a good while ago. So it's kind of interesting to see that you have like this peak depression when it comes to AI agents, market cap being down from 15 bill to 6.6 bill over the span of a couple of weeks. On the one hand, but on the other hand, you actually have some of the bigger protocols like Virtuals meeting up with X officially to see where this thing is going to go. So there's a crazy amount of discrepancy between the price action that we're seeing right now on the one hand, and on the other hand with the actual serious interest that still exists for agents and for AI in general.
Yeah, it's an interesting point, right? I think definitely the market's got completely exhausted by the AI run up. What's your position here? Do you think this is like a healthy correction where that needed to happen to the AI market? How did you position yourself from a portfolio perspective? Obviously, it's something that we're all interested in, but it doesn't necessarily mean that that the valuations were justified, right? What was your thinking there?
Yeah, I think the AI agent hype was pretty excessive if you think about like how quickly things went up. If you think about the amount of tokens that launched on Virtuals on a day, I think it was peak 1.3, 1.7K agents. Yesterday we had like 6 or 7 agents launched, so that's down 90, I don't know, 6-ish% from the peak that we hit. Was it in December? Was it in January? On the one hand, and then what we've seen is basically every idea being turned into an AI agent that exists on the timeline as a chatbot, and I feel like people also got a bit saturated with that. And now it's going to take a bit of time for that excitement to come back once we again will see more impressive use cases rather than the again already overly saturated chatbot market that exists under everyone's posts in the form of dozens of agentic replies. And I just think that most of them are way too similar in the terms they write. And yes, some of the agents are, just replying, but they're building something else in the background. They're building autonomous games. They're building the terminals like AIXPT or Veda are building. But until we see that next phase of like customer facing developments that go beyond just the interactions on the timeline, I feel like it's going to be a bit more depressed in the price action.
Yeah, I think that's fair. I think the big mistake, or I think one of the things that happened was, I remember when virtuals went to like 3 and then 5. I think the key question I asked myself in that 3 to 5 region, and this is really the key question. It's about risk reward, isn't it? It's about saying, well, in the best case scenario here, what are you playing for? Like once it's gone to 3 to 5, where do you think it's going to go next? And is it worth risking the capital you have in order to get that final amount? I had this conversation with a couple of people then who were holding big amounts. I held a reasonable amount at that time, I think. I was like, okay, you've got to 3 bill, you've got to 4 bill. I think maybe at one point it hit the top at 5, maybe. Legendary, I don't know if you've got the chart. And it's like, well, what are we playing for? Is it going to 2x? It's going to go do a 2x to 10. Like people were talking about $100 billion market cap for all AI agents, right? And I think it got to maybe 20 something at one point in its high point. Virtuals obviously being the main platform where this stuff was getting launched. So if that was ever going to be the case, I guess you would think that that would be the place that would benefit hugely from that. But for me, it was a question of, and we speak about this a lot in general, right? Risk reward. once you've seen the run up from a few cents, 10 cents, 20 cents, 30 cents, I can't remember the exact point we got interested in AI agents. I'm sure it was like pretty damn early. Once you've already got to $4, a lot, you gotta be able to appreciate that's a lot of the gains banked. You've seen a lot of the gains. How many more multiples is it going to be from where you are? And I think the realistic answer to that when it was 3 to 5 was 2 to 3, 2 to 3x. I thought would be a reasonable thing. And then you've got to decide, like, okay, well, look at how much I've made in it. Is that a reasonable thing to risk for a 2x, for a 3x? And like, I think sometimes the answer to that might be yes, depending on how much or depending on how early you're in or how late you're in. But I think in that case, you know, I think for me anyway, it was like, well, I don't know if it's worth risking this for an additional 2x. So I think that's the way to think about it, right? You know, obviously I didn't, I'm not saying I sold the top because I definitely didn't either, but I think that way of thinking has been helpful to me in the kind of this cycle as well. Legendary, what are your reflections there purely on price action?
Yeah, no, I remember when the three of us, Sammy, yourself, and me, talked about virtuals first, and Sammy has bought a bag. I think it was like a 330, 350 mil, somewhere in that range is when I bought two, right? And I felt a bit, this is already up. That was in November, and it was in October, it was like at 50 mil. This is already up a 7x. And my exit liquidity here, because it looked like very significant. And obviously, if you look at the chart now, like it's barely a bump, it's barely a pump compared to what came after that. But as you said, like, you know, we were like very, very excited about the timeline. Everyone was, and many people said base case is 10 bill. But if you're already at 5 bill or 4 bill with that, at one point, you have to ask yourself, risk reward wise, if you look, if it's at 5 bill and you think this is going to go to 50 bill and I see a 10x there, that's a different perspective, and you can buy in. This is your hypothesis, and it might get validated, it might be wrong, but that's a different risk reward than to buy at $5 because you think it goes to 10. But at the end of the day, obviously, when you are within a massive hype and you see every agent launching every day, going to multi-million market caps, it's hard to know when to scale out. And I think it was Zeneca who said that, like, it's not important to like time the top perfectly. It's important to scale out over time. If you sell within 20, heck, even 30, 40% of an all-time high of something, you are doing pretty well. And whenever you hit a new all-time high in your portfolio, take out, I don't know, 2% every week, whatever, just see that you scale out of that. I've also seen the conversation on the timeline where people confronted ICO Beast for, you know, being very positive about agents and the price action, and saying that ICO Beast never said to sell, always said it's going to go higher. And then ICO Beast did a little video where he did a Command F search on like his phrase "always be selling." He posted like probably 30 or 40 times to take profits on the stuff. So ultimately, that's the game we're all playing, the hot potato game, and everyone has to decide for themselves how and when they exit. But also very curious to hear Funky's thoughts on that, since he has his hand up. Funky, my friend, welcome to the stage.
GM fam. Yeah, no, this is really interesting reflection, especially for my part, and sort of something that I can shame myself publicly. So a little bit of self-flagellation here, but bought virtuals when we talked about it on the show, probably somewhere in that 40-cent range. And of course, this is not my bag, right? I do just tiny little bits. What I put into virtuals would be like an average DCA for me into Bitcoin. So it's not like we're talking a lot of money here. And one of the rules I had said to myself is never look a 10x in the face this cycle. Like if I have a 10x, just sell half, right? Just don't be stupid about it. But in the specific case of virtuals, when I did hit that 10x, I didn't sell because, of course, you know, to paraphrase, you know, Chappelle's show with good old Rick James, instead of cocaine is a hell of a drug, greed is a hell of a drug. And I was also being a Vader only kind of AI agent guy. I've been wanting to put.
You really loved Vader, Funky. Something about Vader really got you, didn't it?
It did. You guys totally Vader pilled me, but I like it because of the passive income play. I like sort of the long range.
It's interesting. Yeah.
And so the reason I didn't sell, and it's funny that you just brought up ICO Beast, the reason I didn't sell any of my virtuals is because I had missed by like a few seconds getting into the very first small cap DAO. And then I got into the micro cap DAO. And then I knew that ICO Beast was going to be the first human managed DAO. And I'm like, well, hell yeah, I want to throw some virtual in his DAO too. And so I didn't sell any virtuals because, again, I don't have a ton, right? And so I thought, I want to save and put some into his thing and let him do his thing, because at the end of the day, what I put into virtuals overall is not a life-changing amount of money. It wasn't going to make me rich, but it still underscores the point of how volatile these markets are. And again, ignoring your own rules. When you make rules, follow them. I said, never look a 10x in the face. I should have sold half right there when I got to like that $4 range like you guys are talking about. But I didn't do it because I wanted to kind of use some of those virtual tokens in these DAOs and Vader. So, lesson learned. Glad I still have mostly BTC. I kind of answered Legendary earlier on the timeline. Like, it makes me happy now. People used to make fun of me in 2021 to be sort of like a BTC ETH guy. And now it's like BTC ETH and Sol. I sleep very well at night because I don't ever have to worry about watching an entire portfolio just nuke when this stuff happens.
Yeah, that's one of the things I like about you, Funky, because obviously you're a big Bitcoin guy, but you also do experiment with other things as well. And that's a sentiment I get with some people who are saying, look, everything you need to buy if you want to make it is BTC, just buy that, hold it for a decade. And that's like completely not acknowledging the fact that not everyone has the size now to buy BTC with a significant bag and wait it out a couple of years to just see that go up, because that's one of the things that we mentioned on the show so often. Like, many people give portfolio advice, but you also have to always put that into perspective and consider the portfolio that they are coming from. Someone who's holding an 8-figure portfolio will look at things differently and is more likely to be interested in scaling that, I don't know, 10% a year, 20% a year, and have a couple aggressive plays in there. And if they play out very well, if not, it doesn't really matter, as opposed to someone who's entering the space with a couple $1,000 and might as well lose them all on the attempt to try to 10, 50, 100x that. So that's one of the things that I very much appreciate about you, Funky, that you have not closed yourself down to only talk about BTC and say this is the thing that's going to cure everyone's portfolio, but also like be very much open to see what's going on left and right of that.
I'm a nerd at the end of the day. I love experimenting. I like playing with things. I like trying out new protocols. I mean, I think that will never leave me, right? Like, that's just who I am as a learner, as a teacher, former teacher. So thank you for the kind words. But yeah, I will always be an experimenter. I just know to size accordingly with a little tiny bit. Not that it's not something I'm going to go in heavy on any of these things.
Appreciate it, Funk. Yeah, I like a little self-flagellation every now and again. I think this is good. I think it's good to have this conversation out loud, because it definitely feels, honestly, it felt like when I'm doing the news, I really take this as an indicator for how the market is feeling. Today, I scrolled through, there wasn't much stuff. There was not as much stuff as before. And so I feel like it's a perfect time to like reflect a little bit more. And this is one hell of a reflection. I've got this tweet to share with you here from Miles Deutscher, who's a very big YouTuber and Twitter. I actually met him just a week or so ago. He said, this is wild to look at. And for people who cannot see, what I'm showing on the screen is not, so we touched on top of the show, the memes being down something insane, right? Like 40, 50% on the week, 30 to 50% on the week. But from the highs, we've got memes down 84. You got Whiff down 84% from the highs. You've got Bonk down 70%. You've got Dog down 96%. You've got Pepe down 65. Pengu down 82. Melania obviously down 90. Trump's down 76. Fartcoin even down 74. I think this was maybe a day or two ago. Obviously, Fartcoin bounced 10% today. But it's not just that, right? So for the people listening in, okay, that's just the meme section. But if you look slightly further to the right, everything else is smashed as well. Like layer 2s, for example, are, we've had a lot of layer 2 launches. Obviously, at one point in time, people were incredibly excited about ETH scaling via L2s and thought that this would be the way for ETH to scale. I think obviously there's been challenges in that roadmap. And though in some ways it's working, there definitely seems to be a question as to the value accrual for ETH as you keep bringing all of these different chains online. You've got Arbitrum down 80%, Optimism down 80%, Manta down 90%, Stark down 90%, Blast down 86%, which would make me think, gosh, you can't really get this stuff funded anymore. Like everything that's been funded will obviously have to come to market. But looking at those numbers, that's not incredibly encouraging for either investors to continue to fund this stuff when this is the performance, unless obviously sometimes the game with investors, and maybe we'll touch on this in a little bit when we get to the Berachain accusations, rumors, question marks. You know, maybe this stuff can continue to get funded so long as people can stake and take profits as they go along without needing to wait for the coins to go down 80%. Before they can start to get hold of their, you know, get a return on their capital. A lot of the DeFi is down as well. Athena's down 60%, Aave's down 60%. You know, we talked about the agent sector as well. Modular blockchains, Tia's down 85% from its highs. Dimension's down 90% from its highs when it came out, and there was so much hope of Dimension. That was the one time I got caught staking this cycle. I thought my rule was, maybe it was after Dimension I changed to say you will not catch me staking this cycle. But Dimension, I think I did stake some at least. And I was like, damn, you're not gonna catch me staking this cycle. Okay, so Legendary, coming to you here. I've basically set the scene. Everything is very, very down bad here. What are your reflections when you look at some of these numbers from their highs, and how do you see things moving forward?
Yeah, all the money is moving into BTC, isn't it? BTC only down 9.2% from the highs, making it, I think, where is the chart again? Where is it? The second best asset. The only one better than that was Mantra. Yes, being down only 5%, but obviously has not the same level of relevance if you look at BTC's total market cap. And then I also had this post out in the morning, which I wanted to talk to, basically asking what's going on. Timeline feels like a graveyard. Majors don't look that bad. Is it the tariff war liquidation that wiped out so many people, or what are some of the hypotheses behind that? And there's been a couple of very good answers. One being by Miles Deutscher, talking about this dip and thinking that it hurts a lot more than FTX in 2022, because back then there was already no hope. People were so conditioned to the downside, they were already numb. But this dip came when people still had hopes of a big old season. Losing hope hurts more than losing money, which I thought was a very good point. Another point that was being made, or 4 points actually, by the Crazy Ape, which I'm also sharing on screen, was first, most didn't have the bulk of the portfolio in safe bets, like BTC ETH Sol, which saw 200 to 500% returns conservatively, while realizing those returns along the way. Second, most don't have additional revenue sources in crypto, access to early stage venture investments and direct relationships with builders in the space. So they get most of the information of hyped up conversation on CT or Spaces. Third, most on making their own decisions, just following the leaders, which works until we see a sudden shift in sentiment, meta or macro head tailwinds. And the last point, very few had any sort of profit-taking strategy, portfolio diversification, or stop losses in place. And talking to the altcoin market cap specifically, XPapi shared this chart, which I'm having on screen, which looks at the altcoin market cap, basically from 2020 to 2025, and it looks at the last halving and how 10 months after that, the altcoin market cap has exploded by 970%, so almost up at 10x. In the current cycle, month 10 from the halving, we've seen a 30% increase. So basically 30 times less of an altcoin market cap pump than the last time around.
That's interesting. That's really, really interesting. I think one of the things people are absolutely convicted to and very, very vulnerable to in this space is, and maybe ourselves included, right? We always look to the past for future performance. And so many people will talk about, I don't know, the 4-year cycle and just be religiously applying to it. And I think so many people, because it's kind of been how it worked beforehand, are so wedded to the concept of an alt season. It's like, okay, if Bitcoin does this, the alts, universally across the board will do something else. And I think it's just not necessarily going to be the case anymore. And to be fair, a lot of stuff did move, right? Doge moved from around 10 cents to about 40 something. So it did a clean 4x. But I guess what people were expecting was, again, another idea that people were always wedded to is the idea that, okay, that was the all-time high before. It's just going to have to go past all-time high just because this is a new cycle, just because there's more new liquidity. Therefore, we must go past the previous all-time high. Otherwise, nothing makes sense. And it's like, look, guys, there's way more coins than ever before. And there's this really interesting, I'd never thought about this before, but this really interesting post from the Nansen CEO, Alex Svanevic, just to kind of, I don't know, this kind of re-visualized or reinterpreted something, which I guess is obviously true, but made a lot of sense to me. He said, in fiat, you have vertical inflation, i.e. the same coin gets infinitely printed, right? And that's one of the criticisms of the dollar, because, you know, you're holding this dollar, but it keeps getting debased and it keeps becoming worthless because there's vertical inflation of that same currency. In crypto, you have this horizontal inflation. And so you have you might have a fixed supply coin like Bitcoin, or even the other coins, right? Like all of these other AI agents or other altcoins or meme coins, they're all fixed supply. They're fixed supply coins, but they get infinitely created. And so there's horizontal inflation. So you don't need to worry that, yeah, sure, fine, your dog with hat coin is only ever going to have 1 billion tokens. And therefore, you know, you think, oh, well, it's not going to get debased because there's not going to be any more of them. But that's not really the point in crypto. The point is there's going to be another billion tokens. Sorry, there's going to be another billion tokens with 1 billion supply over this time. And to what extent is that coin going to maintain relevance versus the competition for attention with all those other things? So I thought that was a really interesting way to frame it. I think it may be obvious now that it's pointed out, but Legendary, I wanted to come to you here. Like, what do you think about that? Is that an interesting thing to you? Any other thoughts?
No, it's a very good post. Actually want to connect that with another post by Mika. Let me bring it up on screen. There we go. She said, talked a bit about Murad, and then she said, gold should be the biggest coin in the space, the ultimate cult coin, the community of people actually pushing the industry forward and making sure we stay ahead in AI agents. Should be global meetups, underground societies, real coordination to keep us ahead of everything, yada, yada, yada. Which is exactly kind of reconfirming that point. Yes, gold was one of the first AI agents that made waves and has pumped significantly, but it's so hard to keep that attention level up when you then have hundreds of new agents launching every day. And because it's a new topic, everyone is excited about the different aspects of it, which is a completely different sentiment for BTC. Like if you had 100 new cryptocurrencies being created today, which try to emulate to be digital store of value, digital gold, yada, yada, all those narratives that we know, that just wouldn't work out. And this horizontal inflation, like this abundance, millions of tokens being created, made the attention game extremely hard for anyone and to really like win or sustain the attention. I think it was Tyga, the rapper, who launched a meme coin like today in the morning. And what did it do? It went from 0 to 20, 25 mil, and then down to, I don't know, 3 mil within, even faster than usual. Like typically those things took like 1 or 2 hours to play out. I think now the entire move happened within 10 or 15 minutes. So even on that, on the timing side of things, it gets the time frames, how long something stays alive and keeps attention, get even more absurd.
Yeah, it really is. It's okay. Yeah, it's funny the way we're talking about it as if it's all a done deal now. I just think the cycle's different to the way other things have played out. Like Bitcoin seems to be super resilient here. It's just a lot of the nonsense which everyone knows is nonsense has got pretty much annihilated. Funky, your hand is raised. What are your thoughts here? And then we're going to get into the Berachain stuff, because look, there's a hell of a lot more coins and a lot more chains coming and a lot more big launches to come. Got to take some learnings from Berachain, I think. Funky.
No, yeah, I think that was a great. I love the horizontal inflation. I saw a meme the other day where it showed 2021 bull market alt season, and a guy standing there with two pitchers, and there's probably like 12 different cups in front of him. And then it's 2025 alt season. He's holding the two pitchers of water, and there's like a sea of a million cups. You know, there's now like 10.8 million plus crypto tokens, and there was like 20,000 back in 2021. I think the other thing that people fundamentally do not or either forget or don't really ever think about is the fact that crypto as an asset class has always, up until a couple of years ago, existed in an environment of easy money, of QE. And we had stimmy checks raining from the sky in the previous, bull run. So people had money to spend. Inflation has risen. People don't have a lot of free capital. You've talked about this multiple times, Bijak, that this retail is not coming into this market, right? Like Bitcoin is being sustained by BlackRock and everything else. Will we see an alt season if we get some quantitative easing? I don't know, honestly. But I think that people forget that from the entire existence of Bitcoin, it was, at the beginning of the Great Recession, 2009, everything else. And then it starts really pumping. When you look at the very first bull market is when all the equities and everything else started picking up, because you had this kind of quantitative, easing. And then, of course, you had sort of a very brief bear market in equities. Legendary Prime remembers this, 2018. Kind of faded off. And then all of a sudden it was like, oh, wait, keep that money coming. And then all of a sudden it just started taking off again. It's always existed in that environment until we had the quantitative tightening under Powell.
Yeah, I think that's a very, very fair point. In the end, Bitcoin, at least up to date, has not acted like an inflation hedge. It has always moved when rates go lower. And therefore, that's been the best predictor so far. Will that behavior change? We're still looking for that evidence. But no, I think that's a completely fair point about the market in general. Look, I think what we want to do in the last 15 minutes is we do want to get into Berachain. We do want to get you up to speed with this Trump news, which, I mean, to be honest, it's pretty ridiculous at this point. He's just like expanding his own crypto empire. But I want to get you that information so we just know what's going on. Legendary, get into Berachain first though, because I think people will be very curious now. It's not just, yes, there's information about Berachain to learn here, but also we've got to be viewing this in the context of the market which we're in now and all these other big tokens that everyone is still waiting to come to market, and wondering how that will be received. So take it away.
Yeah, let's do it. The way I want to talk about Berachain is split it in two parts. First of all, quick recap of what happened yesterday, and then really speak to some of the FUD that we've seen on the timeline and how the Bera team has addressed that, talking very specifically about incentive mechanisms and tokenomics, which I think could be super interesting, as you said, for some of the other launches that we're expecting. But just a quick recap first, sharing this article from Decrypt on screen. With the Bera launch, $1.1 billion of Bera to be airdropped. We've seen the launch yesterday, including listings on Binance, OKX, and Coinbase, with the token going up to $15 when it launched, obviously with very, very little circulating liquidity at that point in time, because people had to bridge the NFTs over. And that also took time, and the very few people who were able to sell at that point didn't have a lot of liquidity on the other side of the deal, which led to a pretty sharp decline to, where are we now, $7.51. Was a spin-out from a 2021 ETH NFT project, Berachain, that is, raised a bit more than 100 mil, and has, as we just said before, seen a fair amount of criticism, especially when it comes to the treatment of investors and basically early investors and insiders, and how they unlock the tokens, as well as the claim that they might have a mechanism to be able to claim some of the tokens that have not vested yet. All of that is pretty complex. So the way I want to approach it is with this post that I'm sharing on screen, currently by Bera's head of DeFi, who is addressing, I think, a total of 7 or 8 concerns. We're not going to have the time to go into all of them because it's pretty extensive. So I just want to pick out a couple of them, which I found to be the most interesting. Concern number one, which certainly was the biggest one, is that private Bera stakers are getting the majority of BGT inflation, which then gets dumped by insiders. The important thing about BGT, the Bera governance token, is that, yes, you can use it, well, to do governance things and vote, but you can also burn it one for one for Bera. And this was the criticism that has been made on the timeline. They get access to BGT while the Bera is still in staking and unlocking. They can burn that for Bera and dump before their actual Bera stake has unlocked. And Bera team is saying on that yes, private investors do have the ability to stake their Bera. This is very different from a standard Cosmos L1 staking mechanism like TIA. While the top line inflation number, 10% that is similar, Berachain staking yield is comprised of two components. One being the base staking rate, the minimum BGT block reward. This is the reward that goes to Bera stakers, and this is a 1.6% APR at a 10% assumed network inflation. And then the majority of that, and that's the interesting point, the 8.4%, so 84% of the total network inflation going to the rewards vaults. None of this goes to private stakers. It goes to dApps and users that provide liquidity on the network. So quick summary on that: for each BGT, for each Bera governance token that gets emitted, 84% goes to dApps, liquidity providers to the ecosystem, 16% going to investors. Second point.
Can I just ask a question just to maybe clarify? There's a lot of information for people to take in. Am I understanding correctly then, and you might not know the answer to this, right, because we're trying to make sense of quite a lot of stuff all in one go. So if private investors stake their Bera, there's this governance token called BGT, which they get, that is exchangeable for Bera 1-to-1. But the point is that it's only a proportion of the Bera that is theirs that goes to them. A bunch of it goes to the rewards pool.
Yes, so basically the way you can earn BGT is twofold. It's exactly the staking that we said, and the other is to deposit liquidity in the native Bera swap for an liquidity pool pair that is whitelisted to earn BGT, or supplying assets to the lending market. So this is the bigger way, is to be participating in the liquidity provision. This is what they do call the proof of liquidity model.
Got it. Okay, so there is, but that's
basically
not the same as staking, though.
No. Basically, the key takeaway is that there is this BGT token, and 16% of that goes to stakers, and 84% of that token emission goes to people who are providing liquidity in forms that are like stipulated by Bera.
Okay, so to sum it up, the key criticism here was that private investors would hold a bunch of locked tokens. Obviously, you know, when people invest privately, they have a lockup, they have a cliff. Like typically it's like 1 year cliff, 1 year, or whatever. It could be 1 year cliff, 3 years vesting. So that means you're not supposed to be able to get your tokens until the cliff date. Now, from what you've just described, it sounds to me like, yes, there's a cliff at some day in the future, but they're staking it now, and they are indeed able to get Bera or get value out of those things.
Get BGT and burn that for Bera. Yes. So basically, that's the criticism. They circumvent the staking by being able to the vesting, by being able to stake the Bera, get BGT, burn BGT 1-to-1 for Bera, and dump that. And the counterpoint by Bera is, look, from the total BGT emission, it's only 16% that goes to the people who stake. That's a 1.6% APR. That's not significant. The majority of that, the lion's share of that, goes to people providing liquidity.
Okay, got it. But I take your point that that's what they've said in response. That's not specifically a counterpoint, though, because that's just saying, I hear your point, but it's not so significant. The counterpoint would be like, no, what you're saying is not true. So they're saying, yes, it is true, but they're just mitigating it by saying, okay, it is happening, but the majority is going somewhere else. So I think that was one of the key things. People in general, when people find this kind of stuff out, I guess this is why I'm like drilling down into this a little bit more, because this is the thing that really, really gets to people, where I don't think people necessarily like private investors anyway, because they typically just dump all the bags at some point and create the down only chart because they have to wait so long. But at least in normal circumstances, you wait for your tokens and then you're kind of you're obliged to sell, right? Whereas there's something, I don't know if this was said publicly in the tokenomics or where it was written or anything like that, but at least, if you've got your cliff date, people expect that you're able to sell then. If you're doing other things which allow you to sell before the cliff and it's not obvious to people, I think people in general find that to be quite deceptive. But at least there's been some clarification here, if only to admit that that is possible with the way that the economics of the token is designed. So appreciate that clarification, Legendary. Any final thoughts on that?
Yes, it is actually a stronger counterpoint because that APR rate is so little with 1.6%, which means, I don't know, say you stake 100K in that and your APR is 1.6%, you get 1.6K worth of tokens that you can dump. So the key messaging behind this, it's not a significant enough APR that would dump the token price by the people who can basically convert BGD to Bear and dump that before their cliff is actually reached and the vesting has started. So the counterpoints say, yes, that mechanism exists, but it is so small that it shouldn't affect the token price in a significant way. That's the thinking, reading between the lines.
Got it. I understand.
The next concerns, there were two more, like, yes, this was launched at a peak time to just max value extract, also perps being launched instantly. There was more of a general answer to that, not too interesting to go into that. However, the one that I found interesting is because honestly, I wasn't aware. I did make a post on that, latently copy pasting some of that and crediting Captain Jack Bear for that because I didn't know the extent of airdrops that original Bong Bear minters received.
Yeah, it was crazy.
That's actually, I had this conversation with Kodama about Bored Apes, and if you timed like the top on Bored Apes perfectly with the selling the top of Mutant, selling apes at top, selling your other deeds, also the unrevealed lands that trade for 40 ETH for like the inner BYC club lands, I don't know how exactly they were called. You should have received, I think, around 1.5 M if you timed everything quite well or perfectly. And with the Bong Bear minters, originally you minted this thing for $215, 0.069 ETH, received 1 Bond Bear, 2 Blue Bears, 4 Baby Bears, 8 Band Bears, and 16 Bit Bears since then. That basket of assets is worth $2 million, which doesn't include any of the other airdrops of value that was created for NFT holders over the past few years. So that is something I was absolutely not aware of, the massive extent of value being created for people who minted the Bong Bear originally.
That's crazy, right? Like, so that basically, in a very factual way, is the most valuable NFT mint.
Yeah, I mean, obviously it's not a 10K collection like Bored Apes, so like the total economic value that has been distributed to apes is still higher than that. But on a one-to-one basis to compare that, it's insane that this is the number that comes out at the end of it.
That is crazy. Very, very crazy stuff. But look, okay, I think that's a sufficient analysis of Berachain. That's very, very helpful to get a sense of what's going on there. I think we dealt with the criticism reasonably. I think it requires, like, when the tokenomics is that complicated, it requires a bunch more further digging. So I recommend everyone doing a little bit of that for themselves as well. Got a few minutes left of the show today. Just want to get you up to speed with the other final headline that I thought was interesting before we close it off. We've got Trump social media company taking steps to launch a Bitcoin ETF. They really are so entrepreneurial that if they're going to do crypto, then they're going to own half of it. That seems to be the way that they're going to do it. The company plans to launch 3 ETFs later this year, all issued under the TruthFi brand. So this is the details themselves are that, let me close all these advertisements. The ETFs, 3 of them in total so far, alongside other planned products, would be launched under the TruthFi brand. The Bitcoin focused fund, for example, would go under the name TruthFi Bitcoin Plus ETF. The other 2 funds are TruthFi Made in America ETF and TruthFi Energy Independence ETF. The company plans to launch the products this year, according to the announcement, but didn't give further details on the timeline. The SEC will be tasked with reviewing and approving these products once filed. I suspect there will be no issues with them under this administration. And Trump nominated Paul Atkins to be the new chair of the SEC after the departure of Gary Gensler, who left the agency when Trump was inaugurated in January. They said, we aim to give investors a means to invest in American energy, manufacturing, and other firms that provide a competitive alternative to the woke funds and debanking problems that you find throughout the market. We're exploring a range of ways to differentiate our products, including strategies related to Bitcoin. So this is the route they're going. They're going all in on this. I think obviously World Liberty Fi is getting hold of the DeFi approach. They've obviously launched the meme coins as well. Crypto is going to be front and center for this administration, and I think Legendary, you mentioned before, like they are going to be very incentivized to make the space do well, because they are now very much invested to do very well themselves if the whole industry itself does well. Any final takes here, Legendary, before we close out for the day?
Yeah, just a quick favor first to ask you for, can you unshare my screen? My StreamYard is frozen again.
Got it.
Well, thank you. While you do that, it's fascinating to see how entrepreneurial the whole Trump team is, right? We have the meme coins, we have a DeFi platform, we have ETFs coming now. It's basically doing everything that is possible within the bounds of our ecosystem and also outside of the bounds of it by going for the ETF play now. Also, we have World Liberty Fi accumulating ETH, apparently doing token deals as well. Bull posting like KOLs. This is just not even month one. This is like week 3 of his new administration. So I'm very curious to see how far this will go a couple of years into Trump too, because this velocity of things and the things that are planned and the execution speed tied to them does tell me that there's been a lot of prep work that went into this, both on that side of things, on like the, say, crypto execution side, but also on the political agenda. Just look at the number of executive orders that are being signed. I have this app, the POTUS tracker, which is super fascinating. Only like references primary sources and like pings me every time there's a new executive order he's signing, and I get like, when I wake up in the morning, I have like 3-4 new pings to go through, and that's utterly insane compared to other presidencies before. So, not saying this is good, not saying this is bad. This is not the point here. The point is to say there's been a lot of prep work that went into this that we see being executed right now.
Yeah, I think that is true. Interesting stuff, guys. That is our show for the day. Hope you had a wonderful show. Hope you have a wonderful weekend. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour on X, on YouTube, Spotify, and Apple Podcasts. We wish you a wonderful weekend, and we'll see you again on Monday. Take care and have a great weekend. Bye-bye.